And we're streaming. All righty. So, yes, yes. No. Oh, no. What the hell's going on here? What is going on here? All right. Don't. Ooh. All righty. And what's happening? And there we go. And that's ready. That's ready. All right, what do we have here? Hold on. Still getting warmed up. Still getting warmed up. Just getting here. Uh-oh. Come on. Hold on, guys. I'm going to say hi in a second. Where are we? Come on. There it is. And there we go. And there we go. All right. Who do we have in the house today? Gila Lextawa. All right. Hello. Who do we have here? Bruno. What's happening? Happy girl. Good evening. Good evening. Good evening. Roger. Open mic. Scroller. Hidu. Fortis. Chemo Fatty. Some of these names you guys come up with just like takes my breath away. Aaron, Mark, Juan, Manito, Michael, Garth. Did I say Garth? Yes, Garth Brady. Toxic D. Big Bob. What's happening, Big Bob? Niculator. Bashir 67. John VJ. Norm Crockett. Lenny. Is that Lenny? Lenny, yes, you do. CD, Steve, Jack, William. Wow, all you guys. Hi, hi. Hey, hi, hello. Ooh, oh, yeah, David, Phantom, Pop Trades, Scroller, VJ, Lush, Eddie. What's happening, George? Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Lee wants to take a look at MDLN. What the hell is that? Lee, it's never a good sign when I say, what the hell is that? So, Lee, before we go on, let me briefly explain what I'm looking for and what I am doing. I'm looking for a simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks. Those are companies that are consistently increasing their profits and sharing them with their investors. That's us. We are the investors. Okay? Maverick, Sonny, Joe, good evening, good evening. All right, so that being said, what you guys are going to do is you're going to give me suggestions of stocks that you like. I'm going to pull them up on the board. We're going to take a look and see, well, are they good? Do they fit? What's going on? Kind of like that, right? So that being said, how am I doing tonight? I am wonderful. I'm in Eddie. All right, Eddie, how are you today? Cooney, how you doing? D-Rod, Ray, Joshua, Mel, good evening, good evening. All right, what are we looking at? Oh, that's Apache. I like Apache. Not this week. Not this week, Apache. So, first one on the list today, MDLN. Okay, Lee, I have no idea what that is. MDLN. Let's pull it up. MDLN. Medline. Never a good sign. No options, no thank you. See, Lee, what I'm looking for are companies that have weekly options and increased dividend income. So their income or the dividends that they share consistently increase. But they got to have options, which this one does not. So that's going to be a no right off the top. Sorry, dude. Sorry, dude. Sir Jay, what's going on? John Bahay Lee. Therese, good evening. Good evening. Thank you, Therese. How am I doing? Rocket Lab, holy cow. Why would you want Rocket Lab? Okay. RKLB. RKLB. Rocket Lab. No, it's pulling down. That was simple. Right on. Medline, just iPod. No idea what that means. Okay, Medline, just iPod. Cooney, what does that mean? All right. So I'm saying no to this one only because here's your 30-day bottom 3 weeks ago. 30-day top was last week. Now she's coming down. So I'd wait a week or so. What's the next move? Consistently waiting for good companies. IPO, hell no. I don't do IPOs because initial public offering Very rarely do they have 20 years of increased profits. Well, because it's initial public offering. Anderson Castro, how are you? Lucky Dad, Penny, Michael, Saul B, what's going on? All right, so what else do we got? Niculator, Cool Beans, thank you, you're welcome. IPO. Is IPO an actual stock? Okay, IPO is a stock. Imagine that. IPO, Renaissance IPO ETF. December, January. Yeah, no, I don't do monthlies. The numbers just don't work out. Ooh, Asim wants to take a look at Comcast. I like Comcast. I do. Don, Randy, Phoenix, Ray, Greg, how are you? Once upon a time, there's a man from Nantucket. Not now. Yeah, that works. Okay, sit tight. We're going to look at Comcast. CMCSA. Gotta love that one. I'm not quite sure what to do about this. Okay, now don't get me wrong, Asim. I love Comcast. I do. 64 million customers. 64 million customers paying every single month. Yeah. Look at that right there. 30-day bottom is right about here, and she shoots up. Yeah, what do you think it's going to do next? Normally, when it makes a big jump like that, normally it's just profit taking the very next day, which would be tomorrow and tomorrow and Friday. So why are we looking at it? Asim, why are we looking at it? It already made the jump. It's not going to jump twice. Okay, PCG. What is PCG? Oh, PG&E. Interesting. Now this one's better. Got a small little bump. Hit top, bottom. Look at it. Top, bottom. Where was it? Where is it? Down, up, down, up, down, up. Nice. 1568. Let's take a look at next week and see what these 16s are going for next week. Well, now that's depressing. The 16s are going for 5 cents a share. Why the hell would I want to do that? Yeah. It's going from 5 to 12. Not quite 1%. That's going to be a no. Sorry, Sam. Cooney! No, just letting you know, no Medline was IPO'd yesterday, so shouldn't be suggested all by the gentleman. I'm going to agree with you. IPOs don't really work for me, okay? Because they have no historical performance at all, and they have no profits to share. Why would I want to look at it? Think about it. Now, don't get me wrong. If you're a little on the younger side, see, I'm 61. I'm going to be 62 next month, which means I get Social Security next month. Yay. Okay, but I'm at a point where I don't want to buy something and wait for it to move. Where we got the noise in the background over there? Who is that? Who's making that noise? Hey, how's it going?
Hello.
Hey.
I already registered your group. I am from Malaysia.
Hey, how are you doing today? You got any questions?
I'm fine.
Okay, but do you have anything you want to take a look at tonight?
Yeah. I need to which stock I need to buy, which stock I need to sell. I need guidance from your side.
Oh, okay. Sit tight. If you have something in particular you want to take a look at it, put it in the chat. I'll take a quick look at it. If I have any questions, I'll call on you and ask. Now tomorrow morning at 9 a.m. here, we're going to be live again. So if you want to ask in the morning, I'll walk you through how to set up your account, and what we're looking at, and how to set up your list so you can take a look at which stocks to buy and sell. That sound like a plan?
What time you call me, sir?
At 9 a.m. Eastern Standard Time. That's when the stock market in New York opens up.
Okay. Thank you. The list, how about the list? Everything you send by email?
We send that out every Sunday night. The stocks that we're going to look at for the week is sent out on Sunday night, every Sunday night. Okay, so today's Wednesday, which means tomorrow is Thursday. So we're basically at the tail end of the week.
Okay, thank you. See, small guidance from I need your guidance from me. I don't have any basic knowledge. Long time I TikTok followers following you.
Outstanding.
I only control everything. I need some money put and trading. I enough 1% per week. I enough. I guided from last time also. I call. But cannot get TikTok. Also, I send a lot of message. I think you're so busy. That's why I. Please text me also. Can I already give my number? Guide me. The time is different. That is a problem. Yeah, morning now it's 10 o'clock.
Okay, see, when I'm done here tonight, it's 9 p.m. tonight. So in about 2 hours, I'll be done here. If you're still up, you and I can have a chat, a private chat, just you and I, if you're going to be here in about 2 hours. Because the show that for tonight, that work for you?
Okay, 2 hours. Okay, just text me. I already sent my phone number also. You guide me. Wife only everything do. You guide me. His name is Jesslina James.
Okay.
I sent all the message. You guide our small guidance from you. Easy by basic knowledge also I don't know, but I register the group. I trust you. That's why I straight away come and register your group.
Outstanding. All right. So sit tight. Okay. If you have any questions, just put it in the chat. We'll talk about it a little bit. If you're still here after 11 o'clock, which is about an hour and a half, 2 hours, something like that, you and I can have a private chat, just you and I. That sound like a plan? All right.
Thank you so much.
You're welcome. Namaste.
Thank you.
All righty. Let's keep on doing this. What's that? All right. Great. So here we are with PCG. Yeah, that number's not big enough. If I'm buying this thing at 1568, I'm going to be looking at the 1550s, okay, and I'll be losing 25 cents. Then I'm walking away with nothing. Don't get me wrong, I like the company, just this week the numbers don't look that good. Maybe another time. Now look at the jump up right here. That looks pretty good. Kind of sucks that we're not getting our 1%, even though that making the move like it is. Look at that. Top, down, up, down. Now here's the bottom here. Now she's shooting up. I love it when it shoots up like that. But would be better if it's shooting up and I'm collecting a decent premium, which in this case we're not. Oh well. Let's take a look at Johnny Boy. Johnny wants to take a look at General Dynamics. GD, good day. GD, General Dynamics. Wait a second, let's get rid of that. All righty. The high, the low, where was it? Where is it? Look at this. Down, up, down. Here we are right there. So the last 3 months, here's your top, here's your bottom. Shoots up, pulls back up, back down. 336. The 335 is just barely 1%. So let's see that one. Let's see what that one looks like. General Dynamics. We all know who they are. The last 30 days. No real idea where it's going. Say, like down, up, down, up, down, up, down. Yeah, looking for a bottom there. Not quite what I'm looking for. Okay, because it's dropping. Looking for the bottom. Once we find the bottom, she turns around. Maybe. If you like General Dynamics. I like General Dynamics. Can you please check ASBP? What is ASBP? ASBP. Aspire Biopharmaceuticals. Hell no. What the hell is that? No options, and it's at 9 cents. This thing cannot possibly have 20 years of increased profits. Dude, come on. JEPQ. Oh my gosh. JEPQ. Okay, who came up with this one? William, I really appreciate the interaction. I really do. Okay, William, what I'm looking for is a simple, safe, predictable, consistent 1% per week. The only way I'm going to get 1% every single week is to trade something that trades on a weekly basis. Weekly basis. December, January, February, May, January, those are months of the year. No, I don't do JEPQ. Number one, the numbers are absolutely horrible if you take a look at how consistently profitable is that little entity, okay, that don't have 2 decades of increased profits. They don't even have 2 decades of profits, period. Okay, Devo, La Mahone, Devo, D-I-V-O. Come on, Law, what's going on? December, January, February, May. Come on, that's monthly. I don't do monthlies. The numbers just don't work for me. Who do we have over here? Rita! Hello! It's lovely Rita, meter maid. No one can come between us. Ah, love that. Rita the meter maid. Where are we? Devo. Okay, Law Mahomes. Thank you for that, Law. Timmy Knuckles. What's going on? Captain GSXR. How you doing? Ooh, Bobby C wants to take a look at Ford. No. Look at this. The high of the year was yesterday. Bobby, why, Bobby, would you want to buy Ford at the high of the year? Okay, so I don't know where you live or what rock you crawled under, but buy high, sell low doesn't really fit. Okay, we buy low and sell high. Now is the time for selling Ford, not buying it. Don't get me wrong, I love Ford, I do. It's in my repertoire. When it comes up, okay, it drops, that's where I want to look at it. It shoots up, it drops, that's where I want to look at it. It shoots up, I don't want to look at it where it's at the top. It just doesn't make any sense. But you know what? I'm going to put Ford down for 2 weeks from today. Oh, you know what? No. Next week. Let's look at Ford again next week. Here's my reasoning, Bobby. All right. Your top is here. Your bottom is here. $12.40 is the bottom. Okay. Shoots up $2. Okay. So from 12 to 14 is $2. It's not a lot of money, but on a $12 stock, it is over 16%. So it's a 16% jump. Now it's pulling back. So when it's done pulling back, I'm thinking somewhere around 13 or 12 next week would probably sound like an interesting number. Apple user K. What is K? K is Kellanova. Hell no. I don't do monthlies. Monthlies just don't work. See, I got 5 simple rules. Rule number 1 is never buy something you don't want to hold on to long term or you don't understand it. If you don't understand what's going on with Kellanova, why the hell are we looking at it? Because think about it. When I say weekly options only and you say, hey, let's look at K, well, K is a monthly optionable stock, and that's a hell no. So apparently you aren't really looking at it. You just want me to do the work for you. Okay. Altria. I love Altria. I do. M-O. Here we go. A nice little run up. Top, bottom. Drops up, sideways, up, down, up. 59.18. So if it's at 59.18, I want to do the 59s, and that's going for right around 59. So let's do that one. I like Altria. I do. So let's take a look at all the numbers for Altria and see if it makes the cut. All right, let's do this. You ready? A year ago, Altria is at 54.48. Now, it bottoms out at the end of January at 50. We topped out the end of August at 68.73. From there, the last 90 days, the last 3 months, here's the top, here's the bottom, here's where it was 90 days ago, here's where it is today. She went up, she came down, she went up, down, up. Okay, right there. That's what I'm looking at. I want to zoom in a little closer to see if it is a good trade or not. Leah, how are you today? Hello, baby. Yeah, this is the Big Bopper speaking. Will I what? Oh, baby, you know. Here's the high. Here's the low. Here's where it was. Look at the motion. Up, down, up, down, up. This don't look good. Now, I like the stock. I do. But look. Bottom is here. Shoots up. Pulls back. 57.60 to 59. All right, it's only $3. Not even close to 10%. But today, we have a higher high than yesterday, and we have a lower low than yesterday. So what's really going on there? And do you like the stock? Well, let's check it out. Altria at 59. Altria at 59. There it is right there. Let's just do one and see what that looks like. Here we go. Altria. Buy one covered call. Altria, M-O. 26 December. That's next Friday. The $59 call option. Well, the profit's 48 and the investment is 58. Well, let's check it out and see what those numbers look like. For that, we're going to need our calculator. Come out, wherever you are. Here we go. Okay, profit, 48.50. Now, anytime you're looking for a rate of return, you're going to take the profit, 48.50, and you're going to divide it by the investment. Well, this week, the investment is 58.52. Now, for those of you that are new here, I'm not really buying. Okay, the way I'm looking at it is I'm not buying stocks. I'm creating weekly cash flow assets. Okay, I'm creating an asset that gives me weekly cash flow. So every week, I'm going to collect something from this position. Well, my goal is 1%. So 1% every week comes to about 50% per year. Now, I think 50% per year is great, but I'm retired. I'm not looking to hit a grand slam. I'm looking for a simple, safe, predictable, consistent 1% per week. This strategy I created for my 9-year-old daughter back in 2008, well, it's just been working so wonderfully. I'm just going to squeeze out everything else and just do this because I got like 7 accounts and I got this one account that I was working with it. And I'm thinking, I'll do this trade, do that trade. And every other trade just doesn't work as consistently as this one. A covered call on a stock bouncing off of a 30-day bottom, coming off of a 30-day high just before the dividend is paid. That works for me. Everything is leaning towards my favor, which is what I want. All right. 48.50 is the profit. The investment is 58.52. 58.52. Grand total of 0.8. That's not even 1%. So, no, I'm not going to do it. See? 0.8. No, thank you. And I like Altria. I do. Who came up with that one? Apple user. Sorry, dude, just didn't work it out. Kevin Smith. Who are you? ARB. Is that Arbor Realty? ARB? I have no idea. Let's find out. ARB. ARB. Alt share member arbitrage. No options. Hell no. Sorry. Normally, I have to take something for it to shoot up like that. Okay. Maybe EOG on Monday. Phantom, let's take it out. Let's take a look. EOG. Okay. Now, don't get me wrong. EOG is on my list somewhere. However, look at where we are. Okay. The top, bottom. Where was it? Where is it? Up, down, up, down, up, down. It's actually down today, making a little bit of a turn. Okay. But it's only one. Okay. Bottom, top, bottom. Here we are, bouncing off this bottom, off of this 30-day top. That's what I'm looking for. It's not that difficult if you think about it, because I'm only looking for 5 things on the chart. 5. Okay, number 1, where's the high? Right there. Number 2, where's the low? Right there. Number 3, where was it 30 days ago? Right there. Number 4, where is it now? Right there. And number 5, what's the motion of the ocean? up, down. That's it. Okay? So I like it, but I want 2 days. Today is just 1. Maybe tomorrow would be 2, which means it could be a possibility for Friday for me. I mean, if you want to do it, yeah, have at it. Okay, but let's take a look. The 105s are going 140. Yeah, let's check it out. The 105s, the 105s right there, 105s right there. And just 1 contract. And let's do it. Here's Johnny. Buy 1 covered call EOG. 26 December. The 105 option. 189 is the profit. 10 G's is the investment. Now, anytime you're going to get an investment or looking for a rate of return, you got to put some skin in the game. You got to put some money down. Okay, so what are we doing? Well, we're taking the money. I'm taking the money that's in my nest egg, from my 30, 40 years work of work. Well, actually, my first job was in 1974. Okay, some of you weren't even born then. My very first job, 1974, Old Man Simmons Farm. Okay, yeah, I worked on a farm, my very first job. I worked for 50 years. That's a half a century. I retired 2 years ago. So all the money they have accumulated, and it's not as much as you think. Okay, I have enough for me to live comfortably for the rest of my life at 1% per week. Now, if I don't get 1% per week, you're going to hear me saying, "Good afternoon, welcome to Walmart. Will that be paper or plastic?" Oh, that's right there on aisle 4 on the left-hand side, 3rd shelf to the right. No, I don't want to do that. So I don't have the luxury of being wrong. I don't take risks because I'm kind of enjoying doing my own thing. I wake up when I feel like it. I work if I feel like it. I don't work if I don't feel like it. I don't have to because I put in my 5 decades of work. So step back, let the younger generation come on in and do their work. Okay? Do your work and shut up. Shut up and grin and bear it. Oh. Anyway, let's do the numbers on this, see what it looks like. We don't even have 1 yet for today. Nothing for today. 189.50. Okay, that's the profit. Okay, max profit, 189.50. Do you remember every single video you ever see me do? Hey everybody, my name is James. This is Dividend Stock Talk brought to you by the 10-Minute Trader. I'm looking for a simple, safe, predictable, consistent 1% per week. Simple. That's the easiest trading strategy, is just to buy the stock. That's the simplest. But the problem with just buying the stock, you gotta wait for it to go up before you make your profit. Okay, well, I don't want to wait. So the covered call, I buy the stock and I sell the option at the exact same time. I don't have to do 2 trades. All right, so I jump in, I buy the stock, and I sell the option at the exact same time. Well, the stock doesn't have to move, and I still make my profit. Okay, so I know what my profit. Simple, safe. The covered call is so safe they say you can do it in your government-sponsored IRA. Yeah, you can do a covered call in your IRA. There's a lot of trading strategies you cannot do in your retirement account, but this one, you can. Third, make sure the company's consistently profitable. Why would you put your money into a company that's not consistently profitable? That makes no sense. Anyway, it's back to where we were. Profit. I know what my profit's going to be before I even do it. Remember I said simple, safe, predictable? So I know what my profit is going to be before I even do the trade. Because if I don't like the numbers, I'm not going to do it. Now, I look to get in on a Monday and get out on a Friday. Ideally, it's wonderful when that works. It doesn't work all the time, but most of the time it does. And when it doesn't, I just take that stock and I push it into the next week and I do the whole thing over again. The beauty of the system is you buy an asset, okay? Whether it's 100, 500, 1,000, however many shares you want to buy. It's in multiples of 100. So 100 shares equals 1 contract. 500 shares equals 5 contracts. That is the weekly cash flow asset that I'm looking for. Okay? So if I get one contract, I can do this every single week. Now, this week it's offering me 189. Next week it might offer 190, 182, 175, 200. It's going to be different every single week. Imagine, if you will, if you bought a soda machine, a vending machine. It's going to cost you 10, 15, 20,000 bucks, whatever, a good vending machine. Okay, you put it on whatever corner of your town you want, and every single week you go and you empty out the money. This is almost the same thing, except I don't have to go anywhere and take out all the nickels and restock the machines. No, I just go in and say, all right, what did I buy it for? What did I sell? Where is it at now? What does it look like it's going? And what should I do? It's really not that difficult, considering it was created for, oh, we haven't done this in a while. It was created for my 9-year-old daughter. So as soon as we're done with this, I'm going to introduce you to the little princess. So 189 is the profit. The investment is 10 grand. Divided by 10, 321 gives us a grand total of 1.8. Oh, hell yeah. I like 1.8. Whoops. Here we go. 1.8. First one of the day. Yay. Okay, 1.8. Where is it? Where is it? Where is it? There it is. Whoa. EOG, 26 December, 105. 179 is the profit. 10 G's is the investment. No matter what you're going to do, if you're looking to invest, you do have to put up some money. And look at it this way. We're the only species on the planet that's got to pay to live here. So as you work through your lifetime, you take a little bit here, a little bit there, you put it into a little basket, and then you take debt at the end of your working life, and then you have two choices. Choice one, you give it to a money manager and they'll take care of it for you. Don't worry about it. I'll take care of it. Not a big deal. But you're going to get a 4 to 5% draw. Or option two, learn to do it yourself. Get 1% every week using this strategy, or use whatever strategy you want. You're in control. You get to do whatever you want. You're a big boy, big girl, you know. So here, this strategy averages 1% a week. That's over 50% per year. And that works for me. And if it wasn't for this strategy, yeah, I'd still be working. Here we go. 1.8. Right there. 1.8. Yeah. Let's do this. What's next? Okay, we did AEOG already. Krista, how are you today? Hey, Freckled Queen, back again. I am blessed to have you in my presence. Thank you, thank you. Dalton, what's up? Mike? OzDoz. Okay, I have no idea. What were your parents thinking? OSD, SSD, SO. Okay, I don't know how to pronounce that one, but all right. Chad, how you doing? La 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 la. Chad, right there. Lau Alfaro. Hello, can you check Meta, please? Why the hell would I want to check Meta? It has 2 years of dividends. Okay, see, Lau, when I say I want 2 decades of profits, verifiable profits, sharing of profit, Meta only has 2 years. 2 years, not 2 decades. There's a big difference between 2 years and 20 years. I'll take a look at it for you, though. I wouldn't buy it because I got another 18 years to go before it makes my list. Meta, really. META. All right. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Up, down, up, down, up, down. 650. The 650 is going for $10. Okay. That's nice. That's over 1.5%. This is a stretch, but Starbucks at 85. Riley, sit tight. We'll take a look at that one next. Now, Meta, all right, Here's the last 90 days, the last 3 months. Top, bottom, where was it? Where is it? Look at this. Up, down, down, again we go. Okay, that looks interesting. Well, let's check it out. Why not? Some people like Meta. I don't, but some people do. Okay, covered call. 650 right there. Okay, just one contract. Here we go. There we go. And here we go. Here we go. Yep. By one covered call Meta. 26 December. That's the option I'm selling. Now it's 2 trades in one. I'm buying the stock, and then within 2 to 3 seconds, I am selling the option for someone to buy the stock for almost the exact same I paid for it. So if I'm paying $649.50, I'm going to sell it for $650. So I make a whopping 50 cents. No, I'm not making just the 50 cents. I'm also collecting the premium, which is $1,000. Okay. However, the $1,000 premium is going to cost me 63 grand. But it is Meta, and it is a $600 stock. So 100 shares, 60 grand. If you like Meta, which I don't. I like to stay under 300 bucks. Sorry, I don't have as much money as you think I do. But I do have enough that I can live comfortably off my 1%, which is what I'm teaching you guys. Okay. Let's try this. Okay, profit 1081, and my investment 63919 63919 919. Here we go. 1.7%. Okay, 1.7% is not bad. Remember, my goal is 1%. I'll take 1.7 any day of the week, but my goal is 1%. Okay, B. Everly, BTC is Bitcoin. That's not a dividend stock. That's a hell no right from the beginning. Let's do this. 1.7. Where is it? Come on. There it is, right there. There she is. Meta, 26 December. That's next Friday. The 650 call option. Okay, a 1081. It's 1,081 bucks is the profit. 63 grand. You want to do a $600 stock, it's going to cost you 63 grand. Okay, well, it's 1.7%. I'm okay with 1.7 because think about it. $1.7. Okay, so think about it. 1.7. If 1% a week is 50% per year, well, 1.7 is going to be a hell of a lot better. Now, I told you we haven't done this in a while, so let's do this. Let's introduce you to the little princess. By the way, she does hate it though. Okay, she does not like it at all. I'm not a princess. Well, you're my little princess. That's what I tell her. You're my little princess. No, I'm not a princess. All right, whatever. Oh, here it is. We're going to my website. There it is, The 10MinuteTrader. I always tell people, do your research. Okay, I've had this website for over 15 years. Check it out. All right, so there it is right there. What I want to show you is right there. That goes to my social media, which is right there, YouTube. That's what I want to show you. Okay, let's go to YouTube because I'm going to introduce you to the videos that me and my daughter did a long time ago. Come on, come on. All right. See, we got 2 lives. Okay. 1's live, 2 live. Okay. Look at this. 1,400 videos. Okay. I've been doing this for a very long time, and none of them, not a single one, is AI. Okay. Me standing in front of the camera 1,400 times to give you guys something. All right. So this is what we want right there. Videos. Videos. The oldest video, okay, oldest videos. Oh, look at this, 13 years ago. Here she is right there, little princess.
Tracy and Pete, as you being part of my Let's Cycle Penny, which my dad had been that's what I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Look at her. She's so pretty. So pretty.
List number 1.
All right, there's me. Wow. Look at all my hair. Oh, where did it go? My favorite part. That's my favorite part. Okay. Yeah, that's my favorite part. Okay, so when you're teaching a 9-year-old how to invest in stocks, I had to make it fun and exciting for her because she's 9 years old. Okay, you know what attention span of a 9-year-old is? Yeah, no. All right, anyway. Yeah, we had a lot of fun doing those. This was like, 15 years ago, something like that. Anyway, let's get rid of this. I just wanted to show you been at it for a while, and that was my daughter, JC. So in 2008, she says to me, Daddy, what are you doing? Can you teach me? So I've never thought I would hear, out of all the things a 9-year-old little girl could ask her dad is, can you teach me? I'm trading stocks and can you teach me? Okay, well, how the hell am I going to do that? So to teach a 9-year-old, simple, safe, predictable, consistent, and no way for her to lose. Okay, that's the criteria that I had to come up with a trading strategy for her. So I got 5 simple rules, and they're very simple. If you stick with the simple rules, you really can't go wrong. Rule number 1 is never buy something you don't want to own or you don't understand. If you don't know what the company does, don't buy it. If you don't know what the book value is, the rate of the profits that are coming in, the dividends that are coming in, how consistently the dividend, and what kind. If you don't know any of that, don't buy it. That's rule number 1. Rule number 2, never sell at a loss. It defeats the purpose of the whole game. And yes, it is a game. It's an adult game. It's kind of like Monopoly. 4 greenhouses, 1 red hotel. Go round and round, round you go. Wait, stop, nobody knows. Rule 3. This one boggles my mind because it is so simple, yet you will notice that so many people go contrary to rule number 3. Make sure, now you're going to, when I say it, you're going to laugh because you're going to think to yourself, duh, that's so simple, anyone should be able to know that. Rule 3, make sure the company make sure the company is consistently profitable. Isn't that the stupidest thing you've ever heard? Why would you not buy a profitable company? Or why would you buy a company that's not profitable? Whichever way you want to look at it, it's just crazy. So people put money into things that aren't consistently profitable. And they go up for a little bit and then they go down. They go up for a little bit, then they go down. Why? There's over 300 companies that just consistently go up. Why not get those? Dividend kings, dividend aristocrats, dividend champions, dividend contenders. Now, Warren Buffett's list, I buy what's on his list, but I don't know if they're all consistently profitable. But I'd like to give him the benefit of the doubt. So the dividend kings is 5 decades. That, my friends, is 10, 20, 30, 40, 50 years, a half a century. Every single year. More money, more money, more money, more money. You cannot be a dividend king if you miss one dividend increase. If your profits go down even once, you get booted off that list. And trust me, if you're on that list, you want to do whatever you can to stay on that list. So dividend kings, 5 decades of increased profits. Dividend aristocrats, 25 years of increased profits every single year, year after year after year. Dividend champions, 25 years. The rules are a little bit different between the champions and the contenders, but still a quarter of a century. And then you got the dividend contenders, 10 to 24 years of consistent profits. So we check every single week. Every single week we look to see how many new companies are available. Well, this week there's 10,710 companies. Out of all of those, only about 5,500 have dividends. They share their profits. The rest of them, they don't share profits. They're what you call growth stocks. And if you're looking for growth stocks, you are definitely in the wrong place. Now, I don't say that to scare you away. I just don't want you wasting your time because I'm not looking for growth stocks. I'm not looking for stocks that go up. I'm looking for stocks that pay. I'll say it again. I'm looking for stocks that pay me to own the shares. They share their profits. The very first dividend stock was sold in 1602. There's a bunch of guys, I don't even know what you want to call them. A bunch of guys got together and say, hey, let's create a company that the world has never seen before. Great. How do we do that? Well, we got to raise a lot of money. So they literally went door to door. Hello, have I got a deal for you? You invest in our company and we promise to share the profits with you. 1602 was when the stock market that we have today was first created. It wasn't created in 1602. The first share was sold in 1602 for the average person, the peasants, okay, the butchers, the bakers, the candlestick makers, the farmers, the woodsmen. Their opportunity to share in profits came in the early 1600s. Great. Well, ever since then, all other companies share their profits. Well, nowadays we got 5,500, 5,500. They share their profits. Those are the only ones I want because they share the profits. I'm looking for cash flow. I'm retired. Okay, if I gave my money to a money manager, I'd still be working because the amount of money I have through traditional investing, where they say, give us your money, we'll give you a 4% draw at the end of the year. Yeah, I'd still be working. But 1% a week, now I don't have to work because the money that I do have allows me to get 1% a week, which pays all my bills and then some. I like the and then some because the and then some, I get to hang out with my grandson, get to do things with the kids, and I get to take trips, go places. Not as often or as glamorous as I would like to, but hey, it's a work in progress. Anyway, let's get back to where we were. All right, 1.69. We did save Meta, didn't we? 1.7. Okay. Let's go to the next one. What else do we have? BTC is not a dividend stock. It's not. Okay, Riley, Starbucks. I love Starbucks. I actually have some Starbucks. So let's take a look at Starbuckies. Let's go to Starbuckies. SBUX. Interesting. Okay, top, bottom. Where was it? Where is it? Up, down, up, sideways. 85.20. The 85 is going 150. That's a hell yeah. I love Starbucks. I do. Because, you get the Americans sucked into that caffeine addiction. Yeah, ain't going anywhere. Never put your children online. I hear what you're saying. She's not a child anymore. She's taller than me. She's 26 years old. So, that was her 15 years ago. All right. Okay, so here we go. Okay, great. Last 90 days. The last 90 days, same thing. High, low, was, is. Oh, look at that. Right here. Here's we are. 85, 85, 85. Nice. Let's do it. Starbucks. I love Starbucks. I do. All right. Covered call. And the 85 right there. One contract. It's going to be a hell of a lot less than that Meta. That much I do tell you. Check it out. Here we go. Starbuckies by one contract, one covered call. 26 December means the option. Now, when I buy the stock, it is mine until I decide to sell it. The option that I am selling, the $85 call option, I'm selling somebody the right to buy it from me for basically the same price I just paid for it. Okay? I'm paying 85.21, and I'm selling it for 85, and I'm walking away with a 143 profit. So people keep saying, well, how the hell can you do that? Simple. It's called a covered call. All right. Yeah, I'm losing 21 cents, but you take it off of the premium, and I'm still walking away with 143. Okay. What does it come up to? Well, let's find out. That's where we need our calculator. 143 and 50, little guys, divided by 8,357, and we have a grand total of 1.6. I like 1.6. One is the loneliest number that you'll ever do. Two could be as bad as one. Come on, come on, come on. It's the loneliest number since the number one. Here we go. Star Buckies. What? There we go. Starbucks. 26 December. $85 call. 143 is the profit. 8,300 is the investment. Any investment you make is going to have a rate of return. What is the rate of return? Well, we know what the profit is right there. What is the investment? 83. Well, you take the profit, you divide it by the investment, and that gives you the rate of return, 1.6%. Have you had any more thoughts on the stock market game you thought about making yesterday? Very little. Very little. All right, so let's go here. Right there. And what did we say? 1.6. This is not good. 1.8, 1.7, 1.6. What do you want to bet? Is the next one going to be 1.5? Who knows? Oh, we got two more to go. Let's come up with two more. Who's got two more? What do we got? What do we got? What do we got? All right, nothing over here. You guys got nothing to say over here? Come on. KJ, I know you got something up your sleeve. All righty. Dr. Dev, how are you tonight? Andrew, good evening. All righty, all righty, all right. SCI. JC wants to take a look at SCI. What the hell is SCI? Never a good sign if I have to say that. Okay, here we go. And SCI. Service Corp. Hell no. I don't do monthlies. I don't. The numbers just don't work for me. Jose. ¿Qué pasa, Jose? What is that? Royal Caribbean Cruise Line? Is that it? RCL? RCL. Royal Caribbean. Okay. Well, look at that big jump. The top, the bottom. Where was it? Where is it? Up, down, up, down, up. What's going on there? Last 90 days. The last 3 months. Top, bottom. Where was it? Where is it? Down, up, down, up, down, up. Okay. Now it's here at 250 to 284, which is $34. $34 on a $200, $250 stock. Well, that's over 10%. Can it keep going? 17, 17, 17. Right there. Here's your last 30 days. Okay? Up, down, up. That's way too high. 30-day top was on Monday. Okay? Tuesday was lower. Wednesday was lower. Yeah, I'm going to say no because it's just not quite there. Suavemont. Faux check Starbucks. I have no idea what that means. KJ, ConocoPhillips. KJ, I knew you had one. You were holding back on me, dude. ConocoPhillips. Check it out. Top, bottom, was, is. Up, down, up. Down, up, down. Okay, 94. The 94, 96, the 95. Oh, hell yeah. Let's check it out. It's 1.5%. Why not? Last 90 days. Top, bottom. Look at this. 1, 2, 3. 3 times we hit the bottom right there. Okay, mid-October, mid-November, and beginning of December. Okay, maybe 95 if you like ConocoPhillips. ConocoPhillips, 95, right there. What do we have down here? PPG, Damien. Ooh, the software calculator that is on the trade. Okay. Vinod. What the hell is that? PPG. We'll look at PPG next. Damien. We'll look at PPG next. Thank you. That was a good one. All right. So here we go. Just one. I don't want to do, if I do 10 of them, you're going to look at it. So that number's too big. Okay. Well, here we go. By one covered call, ConocoPhillips, 26 December. That's next Friday. The 95 call option, 201, 9,300. Well, let's find that out. What does that look like? Okay, 201's the profit. Divided by $9,300 gives me a grand total of 2.1. KJ, the big one of the day, 2.1%. If you like ConocoPhillips. Isn't that weird? Do I like Conoco? I do. That doesn't mean anything to you guys, but you got to figure out. It's always going to be your choice. Think about it. Never blindly listen to some bonehead online. That's me, the bonehead. Okay? Figure out, does it make sense? That should be the first question. There you go. ConocoPhillips. COP. 26 December. That's next Friday. The 95 call option. The stock's currently at 94, 96, so why not do the 95s? Okay. 201's the profit. 29, 92, 99. That's like 9,300. Okay. 2.1%. Now, 1% a week is over 50% a year. So what do you think 2% a week is? 2.1. 2.1. Gotta love it. Gotta love it. Okay, Starbucks. Mary Portrenko. Okay, Mary, you really got to give me the ticker symbol because I really don't know. I've never heard of that company before. Andrew, what is the reason this strategy is dependent on dividend king type stocks? All right, Andrew, let me explain something to you because you're relatively new here. Because if you've been here for a while, you know exactly why I like dividend stocks. So let me just, go through the motions so you understand. All righty. Let's go. Andrew, what we're looking at here is called an EX dividend calendar. Like any other calendar, Monday, Tuesday, Wednesday, Thursday, blah, blah, blah. Okay, December 2025, that's this month. Today is right here. Okay. What you're seeing, these little tiny green dots, Andrew, are companies. Let me read some of them to you. Coca-Cola, McDonald's, Stanley Black & Decker, Kimberly-Clark, Pepsi, Ben Franklin, GPC, Genuine Parts Corporation, Walmart, Albemarle, ADP, Medtronics, Cardinal Health, Illinois Toolworks, McKesson, Cincinnati Financial, T. Rowe Price. You probably heard of all those. What all those have in common is 25 years of increased profits. So if I take a list of all the stocks that I like, Dividend Kings, the Aristocrats, the Champions, the Contenders, Buffett's list, if I take those 5 lists and I throw them into the calendar, these little green dots represent when the stock is having its EX date. And you're probably thinking, what the hell is that? Well, there's 4 dates to remember when you're investing in stocks. And I'm going to explain as we progress. Okay? Like a good movie, everything's going to come together in the end. So sit tight. Okay, so date number 1, the announcement date. That's when you get somebody come on steps in front of the microphone. Good afternoon, everyone. This is James from Dividend Stock Talk. We made so much money this year. This is how you're going to get yours. Everybody's going to that equal share. This is what you're going to get. It's called the announcement date. It tells you how much money we made, how you're going to get your share, blah, blah, blah. It's just, hey, this is what we did. That's all. That's date number 1. Announcement date. Date number 2 is the important one. Out of all the dates, the most important one is date number 2. It's called the EX dividend date. That is the last day the stock trades before the dividend is paid out. EX date, represented by these little green dots. Okay? And remember earlier I said there's 5,500 different companies that pay a dividend every year. So think about it. 5,500 companies paying a dividend 4 times a year. That's a lot of check writing. How many are you going to get? Date number 3, date of record. Oh, wait a second. EX dividend date, the last day the stock trades before the dividend is paid. So if you want to collect the dividend, you got to buy it before that date. This is Medtronics right here. They're having the dividend on the 26th, which is next Friday. So if you want to collect that dividend, you've got to buy it on the 18th, the 19th, the 22nd, 23rd, 24th to get that dividend if you want the dividend. Now, date number 3 is the date of record. Okay, so I don't know if you know this, but many years ago, they used to have bookkeepers who would have a book. And if you own the stock, they would write it down in the book on the EX date. And then they would take it and they would give it to the check writer, and the check writer would write checks on the date of record. So whoever owns the stock on the date of record is entitled to the dividend. Date number 4, payment date. That's when you get your money. The important one is the EX date. That one. Okay? So the reason why I like dividend stocks, besides the fact that they're right there on the calendar telling me when to buy them. Now, Medtronics, the 26th. I'm not going to buy it on the 25th or the 24th. No, I'm going to go 2 weeks, 1, 2, on a Monday, right there. I'm going to buy it at the opening of the day, and I'm going to sell somebody the rights to buy it from me at the exact same time. Just a covered call. That's the strategy I'm showing you right now. So, if I buy it here, I'm looking for it to hit my target before the 12th. If it does, great. I get all my money back, and then the following Monday, I get to pick something else. Well, the following Monday, I'm going to be looking at McKesson, Ben Franklin, Illinois Toolworks, Nucor, ADP, blah, blah, blah. What if it doesn't hit my target? Fine. I get the 1% here. I'll do it again here, get another 1%. And if it doesn't hit my target there, I'll do it again, pick up another 1%, and then I'll pick up the dividend. So it's an opportunity to quadruple my income. Okay, not just the dividend. Okay, 2 weeks before, I can collect a premium. I can collect a premium. I can collect a premium, and then I can collect the dividend. That's 3 premiums, 1 dividend on one stock. Most people just get the dividend, and that's it. Well, bully for them. Great, wonderful. That's not what I'm doing. Okay, I like the idea of getting weekly income consistently. Alcon. I'm on many channels. Yes, Alcon, nine different channels. So I'm broadcasting live on 9 channels. Thank you. PLTR. Andrew, what is the reason this strategy? Okay, yep, got that one. SAC Solutions, how are you? Mary Moeller, PLTR. I don't know why people keep asking me about that piece of crap. PLTR. Okay, so we're on Yahoo Finance. Yep, Yahoo Finance. We're going to look at PLTR. There it is right there, PLTR. Now, Mary, this is why I don't like PLTR. Okay, we're going to go to historical prices. Now, I'm not quite sure if you know what the data stream is. The data stream is here. Okay, the dates. Okay, the opening price, the high of the day, the low of the day, the close, the adjusted, and then the volume. Those are the numbers from every single day. They call it the data stream. You want to find a date? Here we go. October 17th. Here's the opening. Here's the high. Here's the low. Here's the close. Here's the volume. All the information's right there. You know what I'm looking for? I'm looking for dividends only. Okay? It's going to tell me exactly how many dividends Palantir has paid. Take a look. There are no dividends in the time period selected. So as long as Palantir has been in creation, they don't share the profits. So why the hell do I want to buy them? I'm looking for cash flow. Palantir doesn't fit. Neither does Misty, and neither does MST. Sorry, Sal. Neither one of those fit. MSTY. All right, Sal, check this out. You're going to love it, Sal. Okay, here we go right there. Yield Max, ETF, MSTY. That's the one you want to take a look at. Well, let's see how profitable this piece of crap is. Here's the dividends right here. Take a look at them. Let's go all the way back to the first one. The very first dividend paid, that can't be right. Okay, the very first dividend paid by MSTY was April 2024. Sal, April 2024. Dude, this thing's not even 2 years old. It's still an infant. Let's take a look at the numbers. You ready? The very first dividend, 20 bucks. Right there, $20.64. That's awesome. Look at the second dividend, $12. It went from $20 down to $12. That's an $8 drop. That's 40 something percent. A 40% drop, the very first two dividends. The next one, 15, then it dropped to 11, then it dropped to 9, then it jumped back up to 20, to 22, to 15, to 11, to 10. So we were at 20 bucks, okay? A couple of months later, we're at 50% less. Why the hell would you like a company that cuts at 50% less? But hold on. It actually gets worse. It really does. Okay? Very first dividend, 20 bucks. Okay? The dividend they just recently paid, 58 cents. Now, please, Sal, explain to me why you invest in a company that starts out at 20 and now it's at 58. 58 cents, not 58 bucks, 58 cents. $20 was the first dividend. Now, the last dividend they just paid, 58 cents. Why the hell would you be putting your money in that? What the hell are you thinking? That's just my thought. What do I know? You like Misty, you have at it. Altria, popcorn, we already did that one. UNH, we haven't done UNH in a while. Whoops, wrong one. UNH. UNH. Here we go. Top, bottom, was, is, up, down, up, down. Okay, 331. The 330 is going for 675. Now, this one doesn't have dividends either, but you want to take a look? We'll take a look. Okay, last 3 months. Here you go, last 3 months. Top, bottom, was, is. Up, down, up, down. It's coming down at the moment. No. Sorry, no, No, no. What else do we got? Hello, everyone. Hey, Fufu's in the house. Alex is in the house. Brad, I found a list of weekly dividends. What do I look for to see if it's a good dividend or not? Well, Brad, you got to take a look. Just because you found a list of weekly dividend companies, how consistently have they increased those dividends? Is it consistently increasing? There are a lot of companies out there that pay dividends that go up and down and up and down. Hold on, let's take a look at one for a second. I want to show you. You'll see what I mean. Okay. SPY Spiders S&P 500 ETF. Dividends only. All right. Okay, now remember when I say I want to look at 2 decades, Brad, I want 2 decades, that's 20 years. That's 2005. So let's go all the way back to 2005. S&P was still here. Right there. Okay. All right, Brad, are you ready? You ready? 46, 48, higher. 52, higher. 67, higher. 51, lower. That's once. 55, 57, 79, 55. That's twice down. See, 3 days, three dividends up, 1 dividend down. Okay, so 55's right there. 65, 71, 77, 64. That's 3 times it went down. 66, 69, 71, 56. 4 times. 51. 5 times. 50. 6 times it went down. And we're only at 2009. 59, 48. 8 times it went down. 53, 60, 65, 55. 9 times it went down. I can do this all day long. Okay, S&P goes up, it goes down. It goes up, it goes down, it goes up, it goes down. Not consistently profitable. Hold on, let me show you one. GPC, Genuine Parts Corporation. Go back as far as we can. 2005, where is it, right? There we go. All right, 2005. 31, 33, 36, 39, 40, 41, 45, 49, 53, 57, 61, 65, 67, 72, 76, 79, 81, 89, 95, $1.03. Okay, GPC has increased its profits. I need 2 hands for this one. For 7 decades. 7 decades, every single year. More profits, more profits, more profits. Those are the only companies I like. Consistently profitable, willing to share, and have weekly options. That's what I like. Thank you, Andrew. So, Brad, you understand that? Just because you found a list of weekly options, which you can simply go to CBOE. Okay, hold on a second. Okay, CBOE.com, Chicago Board of Options Exchange. It's free. CBOE. It tells you every single company that has options and weekly options. CBOE, Chicago Board of Options Exchange. Well, no, this is not good. Stuck. That's not good. There we go. Okay, what's next? Brad wants to take a look at GOF. What the hell is GOF, Brad? GOF. Guggenheim Strategic. Yeah, whatever. Weren't you paying attention, Brad? No. Okay, no options, no thank you. No options, no thank you, Brad. Sorry. Dwayne. Dwayne, what the hell is that? YETH. Uh-oh. YE. No, we have an issue. We have a computer glitch. Isn't that a bummer? Computer glitch. Well, perfect opportunity to sit down and chat. All righty. How you set a live, oh, have you set a live goal? No. Okay, let's see what we got. Wow, we're waiting for this thing to work and it's not working. Got a glitch. Okay. SCI is going to be a no. Alan, how are you today? Tom. Manolo. Okay. So Trump is using the dividend stocks, or what is he using? No. Trump don't like the stock market. Okay. He said if he can't control it, he doesn't want nothing to do with it. So he doesn't buy and sell stocks. Sorry. How much do I sell it for? Harry, I don't know what we're talking about. Do you own any Yield Max? Hell no. Brad, take a look at all the Yield Max stocks. Okay? Take a look at. Oh, yeah, lovely. Jersey, how you doing? Mara. Okay, unfortunately, Jersey, we're at a little bit of a standstill because we're having a computer glitch. Kevin, Pfizer. Brad, yeah, but GPC is a quarterly dividend. I thought you were looking at weekly dividends. Brad, you're probably the first person who caught that. I was just showing you an example of what increased dividends look like. Microsoft's the exact same way. 25 years of increased profits. I'd show it to you, but we have an issue with the computer. Okay, Harry, how much do I sell it for? Harry, I have no idea what you're talking about. I have a forever question. If I bought an option at 25 at 0.25 weekly and tomorrow it was at 28. Harry, number one, it's not a profit until you take it. Simple, right? You bought it at 25, now it's worth 28. That's up $3. Now $3 on a $20, $25 stock is over 10%. Why not take your profit? Load flow, LUV, Southwest Airlines. I love it. I do. I don't have any. I sold mine. How much do I sell it for? Well, if it's at 28, you sell it at 28. Okay, Padu, QYLD, same thing as those other crappy things. Not consistently profitable and not 20 years of increased profits with QYLD. No name, what is your plan for advanced auto parts? Well, I have advanced auto parts. What do I have it at? Still having a glitch. Still not working. I got no problem calling it quits early because we're having issues. What is the most profitable mutual fund? Don't know. I don't do mutual funds because there's not a single mutual fund that pays over 30%. New Jersey wants to take a look at Macy's. Okay, I can't look at anything because we're having an issue with the computer. Sorry. John, TLRY is a no. I've looked at it before. It just doesn't fit. What do I think about JP Morgan? Okay, I like it. What's your plan with Mara? Same thing. Keep watching it, keep buying it, keep selling it. Even a blind squirrel finds a nut every once in a while. That's a good one. Okay. Saeed wants to take a look at ExxonMobil. We're not looking at anything. Wait a minute. We might. ExxonMobil. XOM. There we go. It's working again. All right. Okay. It's waiting for the data. come on, man. Give us 3 good weekly plays. Brad, give us 3 weekly dividend stocks. I know it's not financial advice. Brad, were you not paying attention? Okay, Brad, were you not paying attention? Okay. Monday, 1, 2, 3, 4, 5, 6, 7. Tuesday, 1, 2, 3, 4, 5. Wednesday, 1, 2, 3, 4, 5. Yesterday, 1, 2, 3, 4. That's today. Yesterday, look at this right here. What is this? Come on. Whoops. No. 1, 2, 3, 4, 5, 6. So, Brad, don't say I give you 3 good ones. I just gave you like 12. What do I think about opening a medical marijuana dispensary? I'd be comatose all day long. Don't get me wrong, it's a good idea, but you have a lot of hoops to jump through, legal problems and shit. But Dr. Dev, I'm retired, so I have no desire to do anything. I actually have a project that I'm working on that I've been working on for 10 years. It's kind of a pet project. I convert boats to run on solar electricity. So that's what I'm doing now. We're working on a 44 footer at the moment. And I really want to do this 92 footer, convert it to solar electricity. But, got to make sure everything's in order. Jimmy, so you own the shares and the options. How often does the options expire? You collect the premium. Okay, so Jimmy, you're under the impression that I'm buying options. I don't. I don't buy options. I only sell them. And the reason the reason being is 80% of all options expire worthless. So I don't buy, I only sell. Okay? So I buy the stock, I sell the option. As soon as I sell the option, hold on. What? It's not working. There it is. Okay. Hold tight for a second there, Jimmy. Jimmy boy. Jiminy. Okay. All right, here it is right here. All right. That's not what I want to look at. Not what I want to look at. Let's do something else. Hold tight. Let's do this. Hold on a second there, Jim. Account statement. I gotta find one for you, Jimbo. Hold on. Oh, there it is right there. Here it is. Okay, this is what I wanted to show you. Come on. There it is. There we go. All right, hold on, Jimmy. I'm going to show you this. I got to blow it up really big so you can see it. There it is. All right. All right, Jimbo, you ready for this? 12:10. That was last week. 12:10. See the number right there? 9:46 a.m. Okay, covered call. I bought 1,000 shares and I sold 10 contracts. Okay, signature. Okay, 19 December. That means the option expires tomorrow. Okay, the $89 call option. Okay, I bought the stock for $90.72. I sold the $89 call option for $3.19. Okay, now if you can't add, see, 10 contracts at $3.19 per share, that one trade right there is almost $3,200, $3,200, just that one trade. But as you see right here, okay, 9:46 a.m. Okay, I bought the option, I sold the contract. This money right here went into my account instantaneously. I get the premium instantaneously. I don't have to wait to the end of the week. What I have to wait for the end of the week is, does it hit the 89 or not? It either does or it doesn't. What happened? Well, 5 stopped. Okay, so where were we? Where were we? What do I think about? Yeah, I already did that one. So you own the shares. How often do they expire? Every single week. NTR, love NTR. NUS, like that one too. But you still own the shares. Yes, of course. See, I buy the stock. I own the stock. And then I turn around and I sell somebody else the rights, not the obligation, not the stock. It's just the right. It's first right of refusal. It's like you have the first opportunity to buy at that price, at a certain date. The one we were looking at was for this Friday, which today's Wednesday, tomorrow's Thursday, and then Friday. Okay, so that's what it is. I'm a bit screwed with Mara at the moment. No, you're never screwed until you sell at a loss, Alex. Brad, I'm new here, brother. So I'm just catching up. Not a problem, Brad. Not a problem at all. Just keep coming up. Just keep showing up. Keep asking questions. It will slowly catch on. Buy a good company. Sell it at the exact same price you paid for it using a covered call. You collect the premium if it's over 1% or more. And then 1% every week is over 50% per year. Diamonds, tell me which app you are using. My point is teach me from the beginner. Okay, the app that I'm using is called Think or Swim. It's a trading platform owned by Charles Schwab. See, every trading platform is specific to whatever company created it. Now, Think or Swim was created by a guy named Toss Sosnos and a bunch of other people about over 20 years ago. He sold it to TD Ameritrade, and then Charles Schwab bought TD Ameritrade. So this trading platform here has not changed in over 20 years. I love it. I hate it when people mess with something that works fine. Jimmy, you have to be comfortable holding the shares forever. Thank you there, Dr. Dev. You collect the premium, but how often are you stuck with owning shares? Okay, Jimmy, rule number 1. Okay, you're just skipping over the rules as if they don't exist. Rule number 1 is never buy a stock unless you're willing to hold on to it. If you're willing to hold on to Ford, fine, buy it, hold on to it. But if it hits your exit target, your profit, get rid of it and just buy it again when it shows up again. Because the interesting thing about stocks, Jim, okay, interesting thing. Look, up, down, 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 up, down. I can do this all day long because that's all they do. They go up, they go down. Here's the thing. When they come down, that's where you buy. When they go up, that's when you sell. Buy, sell, buy, sell, buy, sell, buy, sell. Same thing. Buy, sell, buy, sell. Okay. Now, I'm not looking to buy something to hold on to it for the rest of my life. I want to get in, get a small profit, and get out. And I'll do the same stocks over and over and over again. Now, I haven't done this in a while, so let's do this. Okay, Jim, check a look at this. MPW, CVS, Walgreens, Nextera, General Electric, Siri, MPW. Okay, let's go. Paramount, JD. Oh, I didn't know what the hell is JD. Abelmount, Macy's. Whoops. Macy's, Abelmount, JD, Macy's, Paramount. Those are the companies that I buy. Now let's go up here. That's 2024. Here's 2025. Okay, weekly trades 2025. I share 3 accounts. Okay. Nike, Marvel, Boeing, Gap, Kohl's, Abelmount, Macy's, Hertz, Kohl's, Macy's, Marvel, Abelmount, Mara, AEO, Hertz. These are all the trades that I do on a weekly basis. I share all of them. Okay? Week 35, week 9 for the third quarter, August 25th to August 29th. Account 1, account 2, account 3. Okay? Account 1, we got, I haven't done the percentages yet. Yeah, I'm a little behind with the math. I understand, just curious, with this strategy, he gets stuck with shares. Not necessarily so. Never buy something you don't want to hold on to, Jimmy. Okay, if you don't want to hold on to Mara for the rest of your life, don't buy it. It's actually that simple. If you don't like Ford, don't buy it. Never. Rule 1, never buy anything you don't want to hold on to long term. Rule 2, never sell at a loss. Say, Jimmy, the stock market was created for people to share profits of successful companies. So if you buy a stock, make sure it's one you want to hold on to. All right, let's keep on going. Let's get out of this. If you pull up the SIG chart, would you buy more? SIG. Let's try it again. SIG. Not today. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Look at the flow. Down, up, down. That's the flow at the moment. The last 90 days or the last 3 months. Okay. Top, bottom. Where was it? Where is it? Okay. Up, down, up, down, up, down, up, down. We got a new bottom right there. So yeah, I would buy more only when this hits the bottom and then turns around. Until then, I'm just going to watch it. Until then, I'm just going to continue to collect premiums every single week. Because every single stock I own, every single one, I get some type of return on it. Alex, I'm screwed with Mara because all my money is tied up in Mara until it hits 1196. Okay, Alex, okay? Never, ever, 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 ever put all your eggs in one basket. I learned that the hard way, Alex. I lost 90. Okay, I'm going to say this really slow, Alex, so you get the hang of this. You ready? Here, listen closely, Alex. 91,000 in 1 week I lost because I put everything into one company. It was RNWK, Real Networks. It was one of the first companies to come out with streaming video. This was back in the early 2000s. 91,000 in 1 week because I put everything into just one company. Diversify. Never put all your eggs in one basket. If you got $100, $20, $20, $20, $20. do dividend capturing. It's simple, it's easy. You don't need a lot of money. Okay, at the beginning of the year, we're actually going to go live with my grandson's trading account. Now, my grandson is 5 years old. Okay, his account's going to start out with $50. And every single week, we're going to, all the grandparents, okay, me, the ex-wife, my in-laws, okay, Rachel and Tom, and then my son and my daughter-in-law, all 6 of us. We're going to take our change, throw it in a little jar, and at the end of the month, at the end of the week, we're going to count it up, and my grandson's going to pick a couple of stocks. He's 5 years old. Okay, if you're starting out with a small amount of money, this is perfect for grandkids and grandparents and those people who don't have a lot of money to work with. Because it bothers me when people say, I have no money to invest. Yeah, you do. You just don't want to do it. Trust me, you can go in the couch cushions and get a couple of quarters. You can go under the driver's seat of the car and pick out some change. Worst case scenario, go to the junkyard. Look under the seats of those cars. I skipped rule 1. I got greedy with the 4% return. You know, Alex, it's a good thing that you're young because you don't learn by being successful. If you're successful and you keep making money over and over and over, you don't learn anything. You only learn when you fall flat on your face. So at this moment in time, we're going to call this a learning curve, a learning opportunity, a growth moment. Okay? So Alex, just sit, chill. Let's pull up Mara for a second. M-A-R-A. Okay. So here's Mara. The high of the year, the low of the year. Okay? She goes down, she goes up. She goes down, she goes up. She goes down, she goes up, she goes down. So we're right here right now. So let's zoom in a little closer. Last 90 days. Okay, last 90 days. The high, the low, where was it, where is it? Up, down, up, down. What do you think it's going to do next, Alex? It's going to go up again once it finds the bottom. Okay, here's the bottom. It went up. Okay, we're looking for the new bottom, Alex. Don't panic and don't sell at a loss. Rule 2, never sell at a loss. Okay, so you're at 9.93. You bought it at what? 12? Fine. Let's move this over here. Okay, so next week's, it's at 9 at the moment. It's at 10 at the moment. Okay, look at the 12s. The 12s are going for 7 cents a share. Not a lot of money. But here's the thing, Alex. Okay, you take 0.07. It's 0.07. 7 cents a share. Now I'm going to make the assumption that you got, let's say, 200 shares. Okay, so 0.07 multiplied by 200. Multiplied by 200. Okay, it's $14. No, that's not a lot of money. But hold on tight. That's just 1 week. Let's multiply that by 52. Because if you get $14 every single week from this company, at the end of the year, you're going to have 728. Okay, sit tight. Let's do this for a second. This is going to be fun. I haven't done this in a while either. There it is, right there. All right, Alex, you ready for this? Can someone write the name, the app, please? It's not an app, dude. It's a. Hold on a second. There we go. Come on. I'm trying to answer this dude. Nope, that's not it. I'm trying to do this. Reply. There we go. And here we go. Think or Swim by Charles Schwab. No, it's not Sink, you stupid little. I gotta put this in manually because it wants to put sync. It's not sync, it's think, you stupid machine. Think, THINK, or Swim by Charles Schwab. There you go. There you go. I just replied to you. Think or Swim by Charles Schwab. All right. So, Alex, let's do this. Hypothetically, Alex, let's say you have 200 shares. We already did that. And it was at 1198, 1196. Hold the phone for a second. Clear 1196 multiplied by 200 shares. This is just make it simple. 2,000. Okay. 2,392. Great. Let's go right there. 2,000. Oh shit! What was it? 2,392. Okay. Now we said $14 a week, so you do the option at $14 a week. Okay. $14 weekly. Now let's just say you don't get your 1%. Let's say you only get a 0.5%. Fair enough. Okay, because 1% of 11 bucks would be 11 cents, but you're not getting 11, you're only getting 7. Fine, let's do a 0.5%. 0.5, that's a 0.5% weekly. Okay, so your $2,092, $2,392. Okay, every single week you get that crappy 0.5%, 14 bucks. A 0.5% every single week for 1 year, Alex. The end of the year, you're going to have 3,929. That's after 1 year, not putting in any more money at all. That's the beauty of compound interest. Okay, fine. Well, let's do that for 10 years. Okay, because as I remember, you're a little on the younger side. So 10 years, the exact same $14 per week. Okay, in 10 years, you have $66,000. The same crappy 0.5% every single week. So yeah, if you sell and you take the loss, well, you take the loss. If you don't take the loss and you keep doing that 0.5% every single week over the next 10 years, that $3,000 is going to grow to $66,652. So don't panic. Don't sell at a loss. I only put in 2% of my portfolio, 2% of your portfolio. Dude, you're fine. Don't panic. The stocks go up, stocks go down. You're going to buy something and it's going to drop to the floor. And then you might lose some sleep. It's only money. Money is the one thing that comes and goes, comes and goes, comes and goes. It's your time that you should be concerned with. That's why I like this strategy. It's simple, it's safe, it's predictable, it's easy, it's 10 minutes a day. I get in the morning, I see, what did I buy? What did I sell? Where's it at? What should I do? That takes me less than 10. Let's do one for the fun of it. Let's get out of here. Let's get out of there. Let's pull up. Okay. Nope. Let's do this account here. Monitor. Here we go. Let's get there. All right. First thing I want to do. Okay. These are my positions in this one account. Okay. Watch. Watch how quickly this is. Okay. It's really quick. Okay. BBWI. Okay. I put my cursor right on top of the BBWI. Right click. Create rolling order. There it is right there. Okay. Look. Here it is right there. High, low. Look at this. Down. Now she's going up. Okay, look at that. Lovely. Okay, what did I buy it for? $18.24. What did I sell? $18.50. Fine, I don't have to do a thing. Okay, where's it at now? Great. If I roll it forward, market makers give me 12 cents. I don't want 12, I want 18. That's 1%. So I change it there to 18. Boom, and I do good till cancel. There you go, and I send it off. That's it. It took me less than 1 minute to do that. Less than one. Let's do another one. Dow, same thing. Create rolling order right there. Okay, here's Dow right there. The top, the bottom. Look at it. She's going sideways. This is what I'm looking for. This is right there. 24-cent credit. What did I buy? 24.58. What did I sell? 23.50. 23.58. I sold the 23.50s for this week. Okay, now I have a choice. Do I want to get all my money back, or do I want to take it and pick up another 1% and roll it into next week? Fine, I'll take the 24. Good till cancel. Okay, right there. Good till cancel. Thank you kindly. Confirm and send. There you go. See, there's the order right there. And then I just hit send. There you go. So this keeps popping up because I already have this order there. See, I already have these open orders already set. Set it, forget it, go on with your day. It takes me less than 30 seconds to take a look at each position. HIMS, create rolling order. There it is. There it is. It's dropping. Okay, I bought it 42. Market makers offering 6. No, thank you. That's it. It's actually that easy. You probably already discussed this, but what was your thoughts today on the CPI report? Okay, Dustin, I don't pay attention to that. Simone, what's happening? Joe wants to take a look at Otis. Otis. O-T-I-S. I'm pretty sure Otis is a monthly. It is. December, January, March, June. Yeah, no thank you. I don't do monthlies. They just don't work for me. Some people like them. I don't. Uh-oh, we got 5 minutes left. What's the most you could lose on a covered call? All of it. That's it. Okay. See, the funny thing about a covered call, right? You're misinterpreting Spider-Man. You're misinterpreting what it is. Okay? You buy the stock. Okay? If I buy the stock, I own the stock. If I sell the covered call, well, I don't lose anything on the on the stock. The most I can lose on the stock is what I put into it. But then you got to ask yourself the question, why would you buy a stock there's a possibility of going bankrupt? Because that's the most you can lose. Okay, if the stock goes down, well, you don't lose all of it. You have a chance to get out. But I see your point is, okay, what's the most you can lose? You can lose everything. But then why are you buying stocks that have that possibility of losing everything? Why not companies like AT&T? They've been around for 100 years. Home Depot, they've been around for 100 years. I don't think they're going anywhere. Okay, Procter & Gamble, over 100 years old. Ooh, here's a good one. Consolidated Edison. They've been around for 200 years. Do you really think they're going away? So what you're doing is two different things. You're buying a stock and you're selling somebody the rights to buy it from you. You don't lose any money on the stock unless you decide, which means you have to make a conscious decision to sell it for less than what you paid for it. Well, that's against rule number 2. Never sell at a loss. Why the hell would you do that? What do we have over here? ExxonMobil, we did that one. Even a blind squirrel finds a nut once in a while. That's a good one. Under registration, individual broker, joint IRA. No idea what the hell that means. It's not really a question. Okay, what else do we have? Macy's, I'll take a look at it tomorrow. James, you are one hell of a teacher. I appreciate you talking me off the ledge. You're welcome, Alex. Keep showing up. I appreciate you showing up, and I appreciate your interaction. I do. Thank you for showing up. Kevin, Pfizer, let's take a look at it tomorrow. We got 4 minutes left, and we got a bunch of questions I got to go through. Sorry. If it doesn't hit the 89, what happens? Uh-oh. An Astra, what am I looking at? Uh-oh, I missed some questions. Don't you have to deduct the difference between of the premium and the strike? Well, yeah, in the calculations, but once you do the calculations with the computer, they already take it out. Okay, does the stock price go down when the dividend is paid? Yes, it does. For the most part. Not always, but for the most part. Yep, we already talked about that. We already talked about that. We already talked about that. All right, let's keep on keeping on. What there? Do or do not. There is no try. Wait a second. Wait a minute. Mr. Miyagi said that on the first Karate Kid. No. Do or do not. There is no try. If it doesn't hit the 89, what happens? Canastra, I'm terribly sorry. I'm not 100% sure which one we're talking about. Okay, so Canastra. You got to keep in mind, I got 9 different platforms. 9 different platforms, which means I got 6 different screens that I'm reading. So when you ask me a question, right, I don't really know which conversation we're talking about. Do you know what I mean? It's like we're talking about conversation because I'm looking at it right now. Okay, but when I look away and then I come back and you say something else, well, I'm not 100% sure what we're talking about now. James, you want help? Thank you very much. New Jersey, thank you for your knowledge. You're welcome. All right. What else do we have? Tree Warrior. So now, what do you do with SIG now that it's at 83? Okay. What do you mean? What do I do now? Okay. SIG, check this out. All right. 83 was the closing price of today. Okay. The closing price of today, 83. So 26 December is next Friday. Okay. I can still sell the 83 call option for $1.85. That's over 2%. But I wouldn't do that because I have to check what did I buy signature for. What did I buy signature for? Hold on a second. I think I got it in account. This account right here. No, it's not there. This account here. There it is right there. Okay, holy shit. That doesn't make me feel any better. Okay, so apparently I got 1,000 shares at 90. Okay, I sold the 89s and I picked up 319. Okay, I picked up 3,200 bucks. Okay, but the 19th December, which means it's expiring this Friday. All right, so I bought it at 90. Well, now it's at 83. So what do? Okay, down, up, down. I bought it right there. Now it's down here. I don't do anything. Okay, I'll take a look at what's it doing next week. Okay, now the 90, hold on. Okay, the 90 is right here. I could sell it for 5 cents. Now I get 1,000 shares, so 1,000 times 5 is 50 bucks. I could bring in the 50 bucks and say, yay, it's lunch for 2. All right, or the 90's here. The 90's here. More than likely, I'd end up selling the 88s or the 87s because it's far enough away. It gives me time to move it if I need to. So the 87 is selling for 50. Well, now 50 cents a share for next week, 1,000 shares, that's 500 bucks. I'm perfectly okay with 500 bucks to do absolutely nothing. So the market maker is offering 50 cents a share at 87. It's currently at 83. I'm in at 90. It's getting confusing, isn't it? I bought it at 90. Okay, it's at 83. Now 87 is kind of like in the middle. See, we're here. 87 is right there. So every single day, what did I buy it for? 90 bucks. What did I sell? I sold the 89s. Okay. Where's it at now? 83. Where does it look like it's going? It's going down. Okay. But this is a green day. That throws a kink. That throws a little monkey wrench in the works of life because it looks as if it's stopping. Now it's going up. Fine. So tomorrow we'll know, is it going up or is it still going down? But I have between now and this Friday. So I got 2 days to make up my mind. What do I want to do? Okay. Now on Friday at 2:30 p.m., because I have a live trading group. People jump on and we trade live. Okay, great. And you get to see exactly what I'm doing. And you get to ask me questions right here. But it's live, so we're interacting on a Zoom call. So you're talking and I'm talking. It's not typing on the screen. So you actually get to see what I'm doing. So more than likely, I'll do the 87s and I'll pick up $500 because 10 contracts at 50 cents per share is $500. Okay. Now, if I have to, I'll drop it down to 86. The 86 is going for 70. I'm perfectly okay with that. But if I look at it every morning, what did I buy it for? What did I sell? Where's it at now? Where's it going? What should I do? All simple questions. What did I buy it for? 90. What did I sell? I sold the 89s. Where's it at right now? 83. Where does it look like it's going? It looks like it's going to go up. Okay, what's the safest bet for me and to still bring in money? Okay, the 87 is far enough away, gives me enough space, and I'm bringing in $500. That works for me. Okay, this account here only has 140,000 in it. So 1% of 140,000 is 1,400. This one trade next week, even doing the 87, is bringing me $500. Well, now I only have to come up with 1,000 out of all those other positions. Look at all these other positions. Can I get $1,000 out of those? Hell yeah, I can. Anyway, we're done for the day. You guys have a great day. I'm out of here. What other questions do we have? Any good way to keep track of the cost basis using Think or Swim? Frustrating to keep Excel ledgers. Hey, I know what you mean. Sweet Dan, thank you. So if you search strike price midweek and click on create closing order, then click sell. Why would I do that? I don't want to sell at a loss because we're still talking about the same stock. Remember, I'm in at 90. See, remember, I'm in at 90, which is right here, and it's currently at 83. Why the hell would I sell at a loss? Remember rule 1? Never buy something you're not willing to hold on to. Well, look at the stock. Look at what it does. Okay? It goes down, it goes up. 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 I'm perfectly okay hanging out with this. Okay? I will continually trade it every single week and bring in something. Now, as you can see this week, okay, doing the 87s, I'm not going to bring in 1% on this one position. But the other positions, BBWI, Dow, Devon, blah, 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 all those, I might do more than 1%. But remember, my account, this account is only 150 grand. So I'm only looking to bring in 1,500. In this one position, this one is going to give me $500 next week. So that's more than 2/3 the way. That's more than 1/3 the way there. What's the longest you had to hold a stock before you got your purchase back? Oh, Mike Sweeney. Walgreens. I held on to Walgreens for 18 months. The beautiful thing is, stock didn't drop. Okay, the stock kind of went sideways, and we just kept making money hand over fist every single week. 1%, 2%, 3%, week after week after week after week. It just didn't make any sense to sell it until Walgreens got bought out, and then they went private, and then now that's all crap. Okay, so before that, it was hold on, Target, PPG, and there was another one, Kimberly Clark, KMB. So Kimberly Clark, Target, and PPG all dropped at the same time, and it took Target five or 6 months to recover. Got my money back out of that one. PPG about 4 or 5 months, and then Kimberly Clark was 9 months. But in that 9-month period, remember, 9-month period, I picked up over 35 premiums and 3 dividends. Okay, 3 dividends. I still own the stock, so I still get to collect the dividend. And Target increases its dividends every year. So does PPG. Okay, NJ. No. Okay. 10 contracts at $90 a share. No, it's not $90 a share. It's 90 cents per share. 90 cents per share is $90 per contract. Okay, so it's per share per contract. It's always the numbers are different. So that one I was showing you, it's about $500. And you're right, getting $500 is not 1%. You're absolutely correct. It's not. But I'm okay with it. Okay, so even though my goal is 1% every single week, I don't get that every single week. Because look at all the positions. Okay, was it 1, 2, 3, 4, 5, 6, 7? 7 positions. Do I get 1% from each and every single one? No. My average is 1.4 out of all of them combined. Okay, now if I have 150,000, 1.4% is close to $2,000 a week. I'm perfectly happy with that one. Okay, that's amazing. I thought it would be longer. No. Okay, yeah, 18 months. But the thing is, Walgreens didn't go down. Kimberly Clark, Target, and PPG did go down. Okay, they did go down, and it took a while. And no, but Walgreens, it was awesome. Every single week, 1%, 2%, 3%. It was great. 38. Ooh, I'm out of here. You guys have a great day. We're going to do this all over again tomorrow. Tomorrow, we'll see you. Tomorrow. You're always a day away. Talking about tomorrow. Wipe away the cobwebs and the sore.